Welcome to Nedbank Private Wealth's International Equity Linked Note. This is a sterling-denominated FTSE 100 index Autocall closing at the end of March. Investors can earn up to 5.5% return in British pounds if the index has risen since inception on any of the annual call dates. The performance of this solution is linked to the FTSE 100, which comprises the largest companies listed in the London Stock Exchange. The initial investment term is 5 years. The investment allows investors to earn attractive returns, even if the FTSE 100 index delivers only modest returns. It also allows investors to benefit from capital protection underwritten by Nedbank Limited, which is conditional on the index not falling by more than 30% at the end of the investment period. The investment is best suited to investors looking to enhance returns earned currently offshore, which may be sitting in cash or bonds. It allows protection of capital from market declines of up to 30%. The investment may not be suitable for investors who need to have their capital protected under all market outcomes, or may be unlikely to be able to remain in the investment for the entire investment period of 5 years. So what is an autocall event? An autocall event occurs when the index level is at or above the initial index at any of the call dates or observation dates. This results in the investment to mature and pay out the capital invested together with the return. With that in mind, let's have a look at a few payoff scenarios. In scenario A, the product autocalls because the index is above the initial value at the observation date, which in this particular case will be the 1st of April 2022. At this particular point, the product will pay the capital together with the return of 5.5%. In scenario B, one would notice that the product has not autocalled on the previous 2 annual observation dates. However, at year 3, the index is now above the initial value. This triggers an autocall. This event will result in a payout of 5.5% times 3, which is 16.5%. The term snowball should now be clear in that the return has snowballed over the previous 3 years. In scenario C, at the end of year 5, the index is below its initial value, but above the 70% barrier line. In this particular case, clients will experience the capital protection of 30% and receive the initial value back. This is an instance where the client did not experience any capital loss over the previous 5 years. In scenario D, the value of the index is below its initial value by more than 30%. This is the only instance where clients will experience a capital loss. In this case, the return will be the same as if the client had bought the index directly. In scenario E, it can be seen that all previous observation dates have been missed, but the index is now above its initial value. In this particular case, the product will autocall and pay out the capital as well as the return, which is 5.5% times 5, resulting in a total return of 27.5%. It must be noted that the 5.5% return is an indicative return and will be finalized at the strike date. We have backtested the product over the previous 25 years, simulating purchasing the product every day over this period, which means that we had 6,281 observation points. Based on this backtest, it can be seen that the product autocalled 46% of times in the first year, resulting with clients receiving a 5.5% return. The product autocalled 89% of times within the first 5 years, ensuring that the client received a payout above 5.5% of the initial investment. Only in 11% of times did clients not achieve an autocall event and were faced with a capital loss. Let us recap the terms of this investment. The maximum investment period is 5 years. The investment is linked to the FTSE 100 index with the currency of Great British Pound. The minimum investment is 10,000 Great British Pound. Capital protection is conditional and protects against the fall of the index of up to 30%. The annual indicative return is 5.5%, with the actual return being confirmed post the strike date, which is the 1st of April 2021. The maximum return that one could expect would be 27.5%. Call dates or observation dates are observed annually on the anniversary of this investment, which would be the 1st of April each year. The barrier level for protection is 70%. The monitoring of this particular barrier would be at maturity only. The product fee to advisors is 0.575% per annum. Please note that this particular product closes on the 29th of March 2021. Thank you.